The president of the European Central Bank expressed satisfaction Thursday with progress toward resolution of the Eurozone crisis, saying that members of the currency area had made amazing progress toward reducing government spending. While pessimistic on the immediate outlook for economic growth on the continent, Mario Draghi, the ECB president, pointed to a number of indicators of reduced tension in financial markets, including the return of U.S. money market funds to the region and successful bond sales by Portugal and Ireland. Fiscal consolidation that has taken place all over the Eurozone is amazing, Mr. Draghi said after the ECB joined the Bank of England in leaving its main interest rate unchanged. All this poises the euro area for a recovery that is probably going to be slow, but is also going to be solid. At the same time, Mr. Draghi seemed to leave the door open for a rate cut or other measures to stimulate growth in coming months, without committing to one. He said that inflation would probably fall below the E.C.B's target of about 2% next year, and signaled that next month the central bank was likely to revise downward its forecasts for Eurozone growth. At its regular monthly monetary policy meeting, the E.C.B. Governing Council left its benchmark interest rate at 0.75%, an all-time low. As expected, the E.C.B. kept its powder dry, Karsten Piarczewski, an economist at Bank, said in a note to clients. The British Central Bank, the Bank of England, also kept its benchmark rate at 0.5%, the record low, and left its bond purchasing stimulus program at £375 billion, or $600 billion, after the British economy emerged from a double-dip recession in the third quarter. The economy grew 1% in the third quarter, its strongest quarterly growth since the global financial crisis started in 2008. But growth was helped by Olympic ticket sales, and some economists said the outlook remained gloomy. The big picture is that it's going nowhere, really, Vicky Redwood, economist at Capital Economics, said. Output is essentially stagnating. It's a pretty dismal picture. Mr. Draghi's appearance at a news conference Thursday came just over a year after he became ECB president, and he used the occasion for a little self-congratulation. Mr. Draghi said that ECB measures like unlimited, low-cost loans to banks had helped eliminate the risk that some banks would run out of cash. Compare the situation today with what it was even a year ago, Mr. Draghi said. There has been substantial progress. He emphasized that the central bank remained ready to buy euro area government bonds to drive down prices and avoid extreme scenarios. So far, the mere threat of ECB intervention in bond markets has been enough to drive down Spain's borrowing costs from dangerous levels. Some analysts have questioned how long the calm can last, but Mr. Draghi refused to put pressure on Spanish leaders to ask for ECB help, as they must do to receive it. We stay fully ready to act, Mr. Draghi said, adding, it is entirely up to Spain and the Spanish government to take this decision. Mr. Draghi offered rare praise for euro area governments, saying they have done more to control spending than Japan or the United States. The Greek Parliament's approval of a sweeping series of austerity measures Wednesday really represents progress, especially if you compare the situation to a few months ago, he said. In Britain, recent economic figures show that pressure on households is easing as unemployment and inflation start to fall. But the improvements have not been enough to translate into a marked improvement of consumer confidence. Debenhams and Marks & Spencer are among British retailers that recently gave cautious outlooks for their earnings. Prime Minister David Cameron, whose government is pushing ahead with an austerity program that includes welfare cuts and higher taxes, said last month that the economy was healing. But Mervyn King, the governor of the Bank of England, said 2 days later that it was difficult to know whether some of the recent positive signs would persist and that the recovery was slow and uncertain. On Wednesday, the European Commission cut its forecast for Britain's gross domestic product to a 0.9% rise in 2013 from the 1.7% increase it predicted in May, partly because of risks from the Eurozone. Even though growth remains weak, Britain is doing better than the Eurozone. Germany, considered the growth engine of Europe, reported growth of only 0.3% in the second quarter. The manufacturing sector has also struggled, and output in September increased less than economists expected. House prices are unlikely to rise before 2014, according to the real estate firm Knight Frank. In response to a controversy about a vacancy on the E.C.B's executive board, Mr. Draghi conceded that top management at the bank needs more women. The governing council, which includes the 6-member executive board and the 17 heads of central banks in the Eurozone, is entirely male. Last month, the European Parliament rejected the nomination to the executive board of E.C.B, head of the central bank in Luxembourg, saying a woman should be named to the post. The vote was not binding on European leaders, however. "We know we have to improve at management level," Mr. Draghi said. The E.C.B also announced that it will introduce new banknotes in May 2013 that are designed to be harder to counterfeit and will eventually replace the existing notes. The notes will carry the face of Europa, the figure from Greek mythology.